Good afternoon, ladies and gentlemen. We see half of the people here wearing neckties, which means that we've prepared ourselves for this topic in a sort of halfway mode. This topic used to be very hot a couple of years ago when they were saying that nothing will be left apart from TV and robots will be everywhere in retail, in advice, and we're going to talk about it. I will introduce the participants when asking them questions, and let us start from the following. Sergey, as one of the hosts, and your opinion is of great interest. There are a couple of benchmarks which provide a division between the developing and developed markets. For example, a share of investment, collective investment, or direct investment, up to 50%. It's always emerging markets. Over 50%, it's always developed markets. And there are a couple of benchmarks of this kind. One of them is the share of HFT and algorithms in trade on the markets with high liquidity, derivative markets and currency market. Below 40%, 21, 25%. We're talking about Asia, Latin America, over 40% Europe, 60 the United States, with one exception of the Russian market, where we have 57% shares and 50% at the currency market. Do you see any danger in this respect? For a regulator, as a regulator, do you have a benchmark where you say, well, we probably shouldn't be developing this further? Or if robots follow the same rules as people do, maybe we'll have 100% of robotics. Well, thank you for a question. It's been an unexpected question in a way. Well, of course, we do notice it, and we pay attention, and we follow it, and we watch it. We even we monitor it. We have our internal research. And retail and for trade, it's a plus rather than a minus. Of course, there are some costs when robots disappear, liquidity disappears, but it would have disappeared anyway. In Russia, why do we have more algorithm trade? In 1992, when platforms, we bought platforms at international we jumped over a certain stage, and we applied the technology. Since we didn't have any history behind us, since we haven't used any technology before that, so we made a leap. So Moscow Stock Exchange is now using an algorithm, and so we have certain systems that are working perfectly well. In terms of the internet coverage, Russia is different in a positive way from other emerging markets. So we're a more developed country than Brazil or other emerging markets. Whether it is a dangerous phenomenon, well, robots do go crazy, and you have flash crashes, and it's difficult to avoid. If we see how many people die in road accidents, more people die during a year in road accidents than the Soviet Union has lost during the whole Afghan war. So if we're talking about flash crashes and robots going mad, I think it's very important that the Moscow Stock Exchange is paying attention at algorithms. And we, on our behalf, as regulators, we ask them to disclose the source of algorithm. I think it all works for the liquidity of the market, and it doesn't create systemic dangers. We also have a range of HFT algorithms, and we don't have one provider selling them everywhere. They're not working simultaneously. If HFT robots would be paying more attention at fundamental factors, and everybody has a more or less same evaluation assessment of fundamental factors. We would have tanks, half-filled tanks, and they would be very dangerous, for example, for road accidents. So we do have a danger. I mean, it exists, but some regulators think that you should validate that the algorithms that should be validated. We don't know how to do that. We'd be happy to validate them. There's a law on financial advisors, and that provides for accreditation of algorithms. Okay, so you're going to decide I'm accrediting this algorithm and not accrediting this one. As far as we have this function, the market asks, what does it mean? Accreditation is the first step towards validation. Initial accreditation will be based on very simple rules, basic rules. You'll input your data, and then the answer will be evaluated in the end. And if it fits certain criteria, then you get an accreditation. As for the client's profile and the strategies, again, I mean, you put in certain data, you download some certain data, and the expert council would assess them in terms of sensibility. And so if it fits the algorithm, then it is accredited. Well, you were right in saying that there are certain benchmarks that define an emerging market or a developed market. Trust is one of the benchmarks. If you don't have trust, you need very high profitability or hype. Otherwise, it all freezes down. Why validation is important is when HFT trader work for themselves only, they can influence the price if something goes wrong, but it is their losses and their problems. Once the industry would offer robotized advice, and yes, last year we were describing as something from the future. Now we're living in this reality where a number of major financial institutions offer this type of consultancy. Some provide meaningful analysis. You can compromise this technology, of course. What is important here, the client should understand the limits of the responsibility this consultancy provides. When you have a robot selecting investment portfolio, you won't have 100% annual profit. Doesn't matter who makes the decision, and one shouldn't be offering it as the perfect solution. We'll come back to this topic. I was just thinking that I've seen an ad that mentioned algotherapy. It had to do with some spa ritual with algae. I thought they used it in the wrong way. I think that the way you use validation of certification, this could be called algotherapy. We have 3 representatives of brokers who are leading broker organizations and people known in the market for working with robots and algorithms. So I'll ask a question to Andrei Aledinov from BCS, Sergei Lukyanov from Открытие broker. I will start with Andrei. I said that it's slightly ambiguous in terms of robots. Moscow Stock Exchange has this best private investor competition, and robots are starting to win. When they would be announcing a name no person could have, and nobody would expect a young man or woman who would create this product using a nickname in 4,700% of annual profit. That was the record in 2014. what robots provide is 260% of annual profit. People would do 300%. Andrei, why does it happen? What's going on? Does it mean that people have, won over robots, or does it mean that robots, float to other markets?
То время, пока проводятся конкурсы, оно
The time which the contest runs is limited, and so to earn a guaranteed yield, you need a robot, an arbitrage robot, finding an efficiency, selling and buying and earning a lot using those transactions. But the time of those robots is not gone. However, the space for those robots is now very limited, and those inefficiencies which we had in the market when we had two stock exchanges and not a single MySix, when you could buy one stock exchange and then sell with a significant spread in another stock exchange, created inefficiencies in the market, and many were using us. But the inefficiencies are getting reduced, and to find those inefficiencies and to make use of them, you should be investing lots of money. The infrastructure for the guys like this costs millions of dollars, and normal people cannot afford it. So they are forced to create algorithms taking risks which are not flat to the market. And, well, it does not differ a lot in terms of risks from normal trade. And if someone is able to pursue those algorithms, you can profit from this trend. Well, yeah, people are now using cryptocurrencies, playing in this market. Are they entering the market, or is that that they create inefficiencies on their own? You're told that, well, actually finding inefficiencies in the market is a classical algorithmical trading strategy, but could robots create inefficiencies on themselves? That's a very complicated question, but I think they can. First, robots can fail, and they create inefficiencies on their own. You know about the classical example when one of the robots suddenly started buying at an expensive price, creating an efficiency. And everyone started using it. Right. Sergey Lukyanov. You're selling algorithms, they say. You're offering algorithms to your customers. We all started that the customers came up with their own algorithms, came to the brokers, and then the brokers provided them access to the market. But currently you are inventing those algorithms and offering those to the customers. Is that right? Well, I think this is a rather a question to one of the founders of this out of following strategy to Finam. At Kriti Group and our department does not sell our own algorithms. We could advise our customers to use one of these algorithms pursuant to the law, which will come into effect in this December, the law on financial advisors. And we will be certifying all our algorithms, and the regulator promised to certify our algorithms as soon as possible. But the HFT experience, the regulator has different ways to combat those strategies. The Japanese regulator introduces licensing of HFTs. Maybe our regulator has some thoughts on it as well. And it's interesting to find out how the Moscow Stock Exchange, what Moscow Stock Exchange thinks about regulators and about HFTs. One of their initiatives, we know we have I will remember your question. We'll come back to this. Well, what I meant is HFTs. HFTs are one of the key customers for you because, as you mentioned this, they bring you over half of your turnover, but not in all of the markets. But right, look, there are markets, there are stock exchanges which are HFT friendly and HFT unfriendly stock exchanges, and there is a border, an invisible line. This is when a sea, when you have, it's difficult to get into the sea with a boat, but it's hard to come back on land. At about 70% of HFT share, robots start fighting with each other. But we should also differentiate between algorithmic trading and HFT trading. And there is another trend, what Andrew just mentioned. The number of HFTs is reducing, but their share is growing. They become more powerful, they become more competitive, but in terms of numbers, there are not so many. Only the largest players enter into the markets. That's right, international brands that everyone knows. And the teams which were previously in the market, it is too expensive for them to adapt their algorithms to their conditions. Yes, it is expensive, although the technologies and the hardware cost not so much, because the progress of the technologies and of the hardware is much faster, and it becomes cheaper and cheaper. Yes, that's true. The later you spend money on your hardware, like the MySix, who has just bought a platform, the later you get in the market, the lower price you pay. But it's not about the hardware, it's about the brains, it's about the concepts. There are strategies and methods which are abusive. There are different practices in the market. Right, but let's finish the trends topic. You offered algorithms to your customers. You were the first in the market. Yeah, we didn't offer the algorithm themselves. Well, we offered the solutions, and we provided the customers with tools to build those algorithms. Okay, this is a toolbox, but let's imagine you've solved a type of an algorithm which is very trendy, and all the 50 customers made something similar using a toolbox. And those 50 similar algorithms in the market, is it a threat to the market? No, I don't think it's a threat. But right, let's talk 150 or 250. That makes no difference. We had some solutions in the practice which were scaled up to 500 entities, but it all depends on the blocks you construct your solution from. Everyone has an individuality. One of the most popular solutions, one of the popular services, this is a TAS lab technology, and there's a visual programming there, which enables to construct an algorithm from blocks. And the fact is that we told people to use the technology. There were trainings, and many novices used basic solutions. So it's nothing sinister about that. People started studying this in detail, and then improved their decisions. They improved their solutions, and they are all different, because using a specific number of cubes of those tools, you could create an endless number of variations. The setup is important, because everyone customizes the solutions, and this eliminates all those risks. Right, but this trend that the global players enter into the market, does this show that you need both speed and a large number of platforms to fine-tune your algorithms and dependencies which were not previously in place? Could we say that HFT and algo trading become closer, that HFT becomes smarter and algo trading becomes faster? Yes, that's true, because the technologies enable us to develop any solution very rapidly, and you could also have it implemented very rapidly. We have an algo trading solutions which works using HFT speeds, using a server working at HFT speeds, and we've started with this solution very rapidly. The cost is very low, but those HFT traders which started right now, they are getting smarter. They now work at different platforms. They work with more complex algorithms, processing enormous amounts of data per second. Thank you very much. You're always looking at me in the way. I would like you to tell this to the audience here. Right, but let's move to the banks. Vladimir Potapov from VTB. You looked a lot into auto follow strategies, but right now we have robo-advising as the largest trend. Robo-advising and the regulation is also a huge issue. We had a law passed on individual financial advisors, and a financial advisor could be a robot and a human. Where are the regulatory risks for you lower? We started talking about those risks even before the law has been passed. Right, but when we're talking about the risks, this is all about how we interpret the laws. Because if we take a look at the law, there should be no risks anywhere. You have to make your business transparent and understandable. But you also have to explain, you also have to have some standards specifying all the practices. But if speaking about the human factor, there should be a risk monitoring systems for robo-advisors. And a transparent mechanism makes it easier to monitor. It is easier than 1,000 human financial advisors. As for the performance, AI, robo-advisor, individual financial advisor, this is a question which has been posed incorrectly. This is not about trusting someone more. This is about the investment strategy which a customer has chosen. And you should be looking at the gist, at the foundation, at the main idea of investment which the robo-advisor or your individual advisor proposes. So it's not about the trust, it's about choosing the mechanisms which any strategy is based on, irrespectively of if it's a robo-advisor, if it's a robotics-based strategy. But I think the most important thing is to understand that we have another investors in the market. A normal investor, let's call it like this, and a normal investor cares about different things. The current investor does not care about, the regular investor does not care about what the brokers cared for 10 years ago. They need individualization, they need transparency, and they need the whole thing to be simple. So if we combine those three things, if we give him or her a product solving those three things, we'll succeed. So it's quite obvious that the technology of communication with the customer is becoming more and more digital. This is a trend. 80% of all the implementations in fintech are aimed at customer experience or user experience. And I believe this is a trend. And if we don't take part in it, we will be just left behind. Only 20% or even less have to do with the development and promotion of investment strategies. We could argue who is more efficient here, man or machine. Yes, we will, but could you please say, is there a difference in your clients? Clients who prefer robo-advising strategies and human advising strategies. Is this about the overall mindset, being a passive investor and active investor? Because a human advisor normally is associated with a active investment strategy. The key here is to provide a service satisfying those three requirements I was talking about. And here we cannot provide us an equal service to customers with 100,000 rubles and with 10 million rubles. We can say that there are a financial advisor is not able to service lots of customers with a 100K ruble ticket, lots of them, because of the competition, because of the broker fees. This is not a sustainable business model. And if someone offers a financial advisor for your portfolio, starting at 5 million rubles, this is a huge trick. So I would not trust those offers, because there will be huge fees and commissions here. Hidden fees and commissions. Right. Alexander Yemishov, Tinkoff Bank, our digital everything. In Finapolis, I think Finapolis tomorrow will be a Tinkoff Polis, and rightly so, because Tinkoff has brought lots of customers to the banking financial market, albeit with a smaller ticket. And they all come through robo-advising, through electronic interaction. So this is the image of your marketing strategy at Tinkoff. Okay, well, I can comment on that. Our customers are really very different. These are not the clients of current brokers. These are new people who are new to the investment market. Their logic is quite obvious. The deposit rates are now very low, at 15% 2 years ago, 10% now, but they added this over to the new term, but after a year, the rate is 7%. So they naturally want to take a look at different options to earn money. So our customer is a new customer entering the market. His ticket is normally 20 to 25K. It is not always robo-advising, which the customer starts with. Yes, we do have 1.5 million portfolios using robo-advisor. But normally, the customer invests in things he or she can understand, say Sberbank. It is a cool company. They have lots of dividends. They grow. Naturally, they have the lows, but it's quite obvious that I can buy a share of Sberbank at 10K and have a good yield. So this is what the current investors care about. Talking about advisory issues, I would not agree that you can provide a good advice with a ticket less than 5 million rubles. There are some basic rules for the advice to be proper, to diversify the assets, to diversify the investments, and you could enable the sound approach at a quite low ticket. The certification of robo-advisors solved this task because it guarantees an adequate result. there are 200 rubles shares, there are 1K shares, and you could assemble a portfolio with 10K rubles. Of course, you will have lots more diversification with 5 million rubles, but the risk coefficient will be much lower.
Maybe you got me wrong. We're talking about, we're taking a physical entity. Maybe you got me wrong. I think that the only possible model to service retail and is to develop quality robo-advisors, understandable, comprehensive robo-advisors. If we're talking about online online and offline sales, a physical entity. Our first discussion was about, who's better, machine or a human being. And I remember Alexei asked me, do we believe that you can have 1,500 of financial consultants, physical people who can provide quality services for the clients in Russia and all over the world? No, I don't believe in this model. I'm not saying that robo-advisors are not working. Our mobile app shows that robo-advisors work. Our robo-advisor can be switched on with any kind of sum. I mean, depending on the sum, they will give you the tool. If you have 10,000 rubles portfolio, you'll have one set of tool. If we have 500,000 ruble portfolio, you'll get a bigger toolkit. Alexander, let's get back to you. Client profile. This is something what we've been talking about, using international statistics. Those who use robo-advising products are not from the Y generation, or it's the X generation X, the so-called generation X. 56% of these people are using robo-advisors for sums over $100,000. 40% of clients don't want to hear about robo-advising. The rest are either ready to use or think of it positively. And if we take gender, men lead, and it's not the women who come second. No, it's when people make decisions together, jointly. It's when you cannot define a gender. It's a family, a household. Take a decision to invest, for example. How would you describe your situation? If we're talking about gender, we have more men because they're more tolerant towards risks. What about generation ratios? Well, 85% to 15% men to women. If we take generations, well, 30% are people over 35 years old. 70 people are below 35. So it has to do with the structure of our client services. We are only online. We don't have any offline service. We reach clients through mobile apps. So it defines the audiences we have. On the other hand, I can give you an example. My father invests perfectly well through this app. And he says, well, wow, it's cool. Can you imagine him investing through Sberbank? I mean, I don't think he has this attachment. I think he has Sberbank as well. But he says, well, this is the best tool. I don't want to know about the limits, about, you just remove it. I want to invest into the bonds, I understand. What about, these young people who approached you because they're used to digital, they're used to distance communication with the bank. What kind of products would they rather choose? No, if we're talking about bonds and shares, it's number one because it's more comprehensive. It's simple. You come to the market. We managed it because we made it very simple. It's very easy to start an account. You don't need to go anywhere. If you want to have it signed, they will come to you. If you're inside the system, you do it online. But are we talking about conservative or aggressive investment in your case? We call it moderate. investment according to our system. What do you mean by moderate? Well, someone buys a portfolio of several shares. Sometimes we're talking of bonds, and they would gradually enter the share market. First, it's 25,000 rubles. Then, within a month, they would buy up to 50,000. And step by step, they would get involved and realize it's not that horrible. So we removed all the commission, and we did this all-inclusive logic. We said you don't have to think, nothing unexpected. If you want to invest, you just pay commission, very simple commission. And I think it's very important for the client. They gain trust. They invest once, twice, three times. And after that, they start to grow their portfolio gradually. On one hand, it's a generation that cannot imagine living without gadgets. This is how they grew up. They're not going to go to the bank, and at the same time, they would choose very conservative products. Binary options are more attractive for other clients. The clients Andrei has. What can you tell us about trends among clients? What is your client like? Are they growing more conservative? Will they bring their algos, or they would ask for your algorithms, or they would, can I have something else rather than your normal deposit? If we're talking of algorithms and your newcomers, they need help, they need assistance, because it's not easy to familiarize yourself. Be it robo-advisor or algorithms, help them to make first steps, to try their hand, and some small investments can be done through algorithm. We have some clients who know things, who are skillful enough. For them, a new algo, like AI algo we have, they're just interested. Well, if I trade and if an algorithm trades, so they could single out part of their money and trade it themselves. As for in terms of risk, the more money client has, the less they're prone to risk. They become more conservative with more money, and they want to keep what they have. And they would, if they're not risking big sums of money. Okay, let's ask another broker, Sergey Alexei. What trend do you see among clients who come through robo-advising? Well, robo-advising, it's more of newcomers, the clients who make their first steps, and they do need certain, let's call it an electronic, I don't know, advisor or guide or leader. We have a big number of those to provide investment consulting. Is not profitable, so we provide certain open services. They provide open information for such clients. For example, AutoFollow allows them for certain strategies. You can switch it on, see the trade schedules, and these clients. Well, it's completely transparent, and it's a level of trust. The costs are minimal. The quality is rather high. If we're talking about the people who are ready to do it on their own, we're having fewer and fewer of those. We used to a couple of 4 or 5 years ago, we had 1,500 clients of, active traders. We have a lot of clients coming, but if we're talking about active traders, we're now reducing. They're reducing in numbers. We're talking of other kinds of clients. We're talking, I mean, the people who stay with us. Well, some clients fewer clients are disappointed at the same time, but there's no huge influx of clients. Some of them would provide their own strategies for broad access within AutoFollow, for example. AutoFollow will switch to Sergey, and I'll give a floor to Sergey Lukyanov. I wanted to talk about multi-channeling or omni-channeling. Previous speakers said that, well, people find it easier to use their smartphones to do everything. Once you want to do it, you just use the service. So it's comfortable. You feel comfortable with it. Some people like it going to office, having a chat. But now we have investors who prefer to ask questions in chats, receiving answers from chatbots. So robo-advisors is providing omni-channeling. You can, play with the app, or what robo-advisor would suggest with this kind of risk. Okay, if I answer the question this way, if I take my wife with me, what will they suggest for her? Maybe we'll take decision together, and maybe we'll discuss it within the family, and clicking buttons and ticking boxes. I would compare it with omni-channeling and with a person being able to find an algo of his own, a custom algo. This is transparent. And people select it, and they use the service as if you have it ready at hand. It's like your personal advisor. People would, use their smartphones and not to transfer money, but to see how much they've got, or to see whether they have received money, to compare sums, maybe work with loans. People don't really do things. They want to see how much they've got. I mean, if they see some options, some possibilities, they start to toy with it, playing with it, and later they make decisions. It's like you have a financial consultant, and you chat with them on an everyday basis. You will eventually make your choice. So omni-channeling is a good term. You've said that we can deduce that auto-following could be a way to make people more literate in terms of finance, and people would follow the leaders, the market leaders. At the same time, many regulators, not only in Russia, are rather skeptical about the form of this service. In America, they have 3A4 that auto-follow is wrong, and robo-advising. It is required from robo-advising to be addressing client, to ask the client directly live whether their life circumstances have changed. How do you see auto-following? Is it financial counseling? Are we talking about financial literacy? Is it asset management? Well, it's a life experience. Any experience in life grows your literacy. What do you do with your money? If you lose money, you draw lessons from it. If you gain, you have more interest. So I don't think we should be talking about financial literacy here. We're not thinking of involving people into auto-following to make them more financially literate. Well, it would be too expensive for most of them. We're analytical. Together with other market players, we've done some analytic work. How do we classify, how we define auto-following? Is it financial consultancy, or is it asset management? So we decided it was rather financial consultancy, we've looked into front running, and we've worked with the participants. Well, the leader that others are following should provide a middle price. They cannot be, well, a leader shouldn't be making the first step, and others would be just repeating his actions, because I mean, if it's a very long train, it will affect the market in a negative way. So the leader should be making financial decisions, understanding that they're drawing a big deal. Now, talking of the investment profile, well, the spirit of consultancy, spirit of advice has to do with the person who is being given advice. If you're joining collective investment, you have to be responsible for yourself. You have quail funds and non-quail funds. Leaders don't know anything about their followers, their clients. Well, the clients that have just joined them, they're responsible in fiduciary terms. But so it's very difficult to place this tool. But these algorithms exist. They can be useful if they are transparent and reflect the state of affairs. What we don't like is when autofollow is only virtual, when no deals are being struck, no bonds are being bought, and there's nothing behind. I mean, there are some platforms that offer this kind of auto-following, and this is what we don't welcome in the Russian financial market. We keep shifting to active investment. Well, first you try 25, then you try more and more. But if we look at capitalization of major automobile companies like Ferrari or others, Audi cars, I mean, you have more Audis than Ferraris. I think that market has not yet realized, but technology gives key to this solution. Maybe servicing 10 million passive clients is more interesting than to service to 1,000 active or very active clients who would be madly trading on a daily basis. If we're looking at Russia, maybe, I mean, millions of Russian citizens wouldn't spend an hour or 2 hours of their time analyzing the market every day. Even if we replace physical entities by robots, these people don't have to be active constantly. For most of the people, buy and hold, passive investment using simple tools, smaller accounts, and robo-advising that would create stable and sustainable portfolios with a very small custom for consultancy. I think this will involve more Russian citizens into the financial market than some success stories with 300% of annual yield. I mean, Gauss distribution has not. So marketplace we are creating, and we have two. The one is for brokers, where you can sign a depot agreement in one click, and the marketplace for investors with passive strategy who buy these bonds, and they buy the coupon, and 3 years later they realize that you have 6% of profit, and they will buy this bond again.
Можно через брокера выйти.
But if you want to, you can contact a broker and sell this bond prematurely. So this is a story which we can robotize a lot better, and it suits more clients. Another thing, if I come at a stock market, I am deprived on all other opportunities. deposits can be much more interesting than stocks or life insurance strategies. But it is very difficult to figure it all out. So often this is a rocket science for those who have an education in finance, but it's not a problem for robots. So if you don't dive deep into an option strategy and you don't have a huge leverage, then you will be safe. People just don't want to spend time to figure it out, and I want to spend much money because the fee of a human consultant is much more than the profit that you will gain, much more than the yield you will receive. So this concerns the model of how our citizens interact with the product. We started with the fastest thing, HFT, then switched to algo trading. Alexei Parfenov was switching to the most smart things, investment business and the AI, big data. And if you could you please compare the opportunities for robotization of investment product with IPO, compare it to ICO, which is currently going this way, as is all digitalized and much more simple. Thank you very much. The topic which we're discussing is worth a separate discussion, with a separate panel, because currently it looks like a spin-off, but I will try to argue a little bit about this. The cryptocurrencies market, this wild liquidity which appeared at a very small turnover with $1 trillion of capitalization and a $5 billion of turnover in the cryptocurrency market, and every sell-off would have led to a sharp drop to a level of 2 years ago, and this liquidity should have another opportunities. And so technological startups started issuing tokens and coins, and several billion ICOs have been done over the 2 years without any applicable standard. This is a complete greenfield. Using a white paper, this is a creation and the marketing of an issuer. This is not a legally binding and not a financial document which they have, and not something which should help evaluate the key risks. So, two issues here: a classical instrument to acquire capital, an IPO, a secondary public offering, an ICO, so something completely new, something completely different and digital. 90% of the scams we have, and we will have even more of them, the stats are not complete. Is it safe to say that automation and digitization of the capital markets is not possible because of this, because of these scams? I think we do have hope here, because if we look at the standards of IPOs, be it equity or fixed income, we will see a surreal pricing. Take a VIP service. Why does its service cost so much, despite of its low self-cost? Because it's a VIP service. So if a large corporation wants to enter the market with a huge volumes, we talk about large sums, because there's a fixed cost of $3 to $5 million. So this is a black box. Comfort letters as a guarantee, quality guarantee, the audit, the due diligence of large houses investing their time and establish the reputation together with the issuer. This is important, but the price is so high that that the automation can reduce those prices significantly, and this is a huge market for us. And well, the standards have to be changed. I believe this needs to be done. We need to implement AI here, and I think this will come very soon. Classical offerings will also move towards partial automation. I don't believe in full automation. And the crypto market will be more human, because currently we see a hype, we see a complete anarchy. Mr. Gref says that we need 3 to 5 years to update the technologies. We have an architecture protocol with the Gram. Telegram will shortly offer a tool processing millions of transactions per second. The pre-ICO has yielded so much money that I believe we will have some results. We will see some results with $2 billion. Will we robotize fundamental analysis or algorithmize fundamental analysis? The fundamental analysis will be automated for sure, but there are lots of news who won't be able to take into, the machine will not be able to into account. There are some news from the anonymous Telegram channels, for instance. Say Magnit will be exchanged for a share into Alpha Bank. Imagine how a robot would process this. What will the evaluations be like? Should we buy Magnit shares? Should we sell Magnit shares? Should we buy X5? So, fundamental analysis, we should all be evaluating that Magnit has a 4.5 EBITDA, Magnit has 5.5 EBITDA, and the multiple is the yield, the EBITDA marginal is 7, and the X5 is 7.5. But I cannot understand how we can calculate this using fundamental analysis. So I believe this will be a combination of human using methods of AI, but then combining it into his own judgment. So there's a two-channel model. I would like to pose a question to everyone. Vladimir seems to be bored. I will start with you. Comparing the risks of investor behavior in the market and algorithm behavior in the market. Let's imagine that we have no algorithm left, or nearly no algorithm, or nearly no humans left in the market. What is the difference in the risks of their errors? And the errors they make, the mistakes they make, are those different? But you've told us the stats before, we have both. So it's hard to imagine a situation that we do not have humans or robots. The deficiencies that they work with are strategic or tactic. This is not the same example that we had before, but it's very similar. I believe fundamental questions can be analyzed more easily, but the strategic movements are hard to process. And after all, at the end of the day, it's a human who writes the algorithms, and it changes them. The differential algorithms, if we had a universal algorithms which would work everywhere and would not be needed, would not need to be changed, we would have ended in a different world. So changing the algorithms really influences the outcome. So I cannot say that we can choose between either of those. 20 years ago, data was king, but currently everyone has the data. The main issue, the main problem is processing the information fast. Now you are a visionary, you're considered a visionary if you know some strategic mantras. In 10 years, the visionary activities will be digitized as well. So I believe this is a normal, regular development of the market. And I would like to tell about the technologies very briefly. I believe that technologies are very good and help our market to develop further. Take a look at the product. The colleague just told us about how they simplified a real-life retail product. We did not have a retail rape product for brokers. Brokers were only for the gurus, for the ones and now we come up with a retail packaged product. If we did not have the technology with a digital signature, with identity verification, we would not be able to offer this product. Next, just entering into an agreement took 30 minutes previously. Currently, you could enter into a broker agreement with a single click online. So technology does good. Two more examples, good or bad products. What do those investors invest in? Into ETFs, into funds of specific issuers. There is a problem of monitoring the transactions of the funds. We currently have a check for trip system in place which uses robots to monitor what the funds do, how they trade in the market. The central bank also does this as well. But we would like to understand, by offering this product to our customer, what the funds do. And my last example, the problem we have not discussed today, the profitability decreased, and we have a huge issue of automating the training of our customers. No one has solved this sufficiently. Those robo-advisors we have now, they are at the prehistoric level. The auto-follow is not a one pill because it does not help the customer choose the proper product. Using VR, after we automate this using VR or any other customers, after we are able to train the customer without a human intervention, the puzzle will be complete and we will be having a happy market with not 2 to 3 million, but rather 45 million of customers. I have a last question. What are the risks? What does add up to the risks? Or maybe the robots just need another product to manage risks? Why do you need a fundamental analysis for it? If the shares will be sold or not? Say we have a share. The robot needs liquidity.
We keep juxtaposing robots and people, and I keep hearing, this is the title of our panel. Will robots win? I think both can work. It's the behavior, differences in the behavior, and participants, clients, where they want to earn. The classical intraday algorithm tries to earn within the day. They would speculate. They will look at the drops and the peaks, and this is where they have a certain commission model. Well, people would think, okay, if you have a person, a client, who would be a buy and hold investor, and he will not bring anything to brokers, and he will lose everything because these clever robots will do with him. A regular investor is not at all interested in the moves. I mean, if they want to buy Magnit or Sberbank share and keep this share for a year, what's the difference whether they would enter 1 or 1.5% higher or lower? In terms of fundamental logic of company development, it's irrelevant. Does it mean they lost because robot has got the margin? No, nobody thinks about it. We're talking about two different universes. Well, the robots make some money, and the client also makes some if they've invested in a company that is going to grow. I don't think we should be juxtaposing these two markets. They add to each other, I think, and this is how we can get out of the trap. We've been looking at trading only. We shouldn't be looking only at trading. Of course, if your clients or robots are trading, everybody would be, calculating these small commissions. If the marginality is dropping, how do we invest? Buy and hold investor, this is the client we have. They enter today, they want in a year for Sberbank to grow by 20%. And for them, it's not important whether the commission will be 0.3, 0.5, 0.7. They can pay more because they are doing long-term investment. This is where we should be heading to. These two categories will be there, but the mass investor, this is how they think. Alexei Parfenov. I just want to support my colleague. I think that brokers, we always have people who want to go deep. It's a very narrow group. Let's look at the world. They not only have long-term planning, but their goals are different. People are not thinking of investing $100 and receiving $150. There are two strategies, and we've discussed these strategies with a colleague who's deep into robo-advising in the Silicon Valley. We defined two strategies. One is relatively short-term. How do I buy a car? So you have a goal, not the amount of money you get, but you give your robot a goal. Maybe we should have a loan involved. You need a lot of information. You have time frame, and you need to buy something, and you have some capital market instruments. This is the chance to take different tools, and this is something Sergey has been talking about. Robot will analyze it and provide an algorithm which allows him to drive his beautiful young wife in a beautiful car in a year. If we're thinking more long-term, this is again a strategy you can buy from a robot. Then you set up a goal of reaching a certain amount or certain level of well-being. So we're talking about posing goals. We're not talking about money. How do we? It's not how we make money from shares. We're talking about deeper goals, and there you have a broader audience, and the final client will never. I mean, I've been trading shares for years, and I don't want to open crypto. And I'm happy with a simplified chart in my smartphone. I have long-term strategy. And it doesn't really matter for me whether I buy it today or buy it tomorrow at a slightly higher price. And last question, Andrei. On one hand, robot is more disciplined, but it has less intuition. Am I right? What's the question? The risks. Do robots bring new risks we'll have to deal with, or they would reduce risks? Well, using robots, doesn't reduce risks or enhance risks. It's more predictable. You can, with a higher probability, predict the outcome, and your risks are limited. When human is trading, you don't really know how they make decisions. Today he's in a good mood and they buy. Tomorrow they're in bad mood and they would sell. And you cannot predict it. So this is probably the major difference. So when you're using an algorithm, you have a predictable story. When a person is trading, when something unpredictable happens, like an event, the algorithms can provide a wrong reaction. People using their intuition can choose something better. If we look into the future, using algorithms is like driverless cars. We couldn't believe a couple of years ago that it was possible because, traffic changes all the time. It's unpredictable, but technology evolves, and you have mathematics, and step by step, cars will learn, and I'm sure cars will drive themselves. And it has to do the same with other analytics is the same, providing, computers will have larger possibilities, and robots will be replacing human beings, and human beings have less and less space. Maybe it will lead to the market becoming less volatile and more predictable. Then Sergey and Alexei, you have each 1 minute. Well, colleagues, I just want to remind you that it's not guns who kill people, but people who kill people. Meaning that there's a human being behind each robot, a human being that creates an algorithm. And people are fallible. Who makes more errors, those who calculate using a gadget or those who do it without a gadget? Who is more fallible, a program or a human being? Who misses a button? Of course, people are more fallible, are more prone to error. Just think of people, adding randomly another zero. We have a lot of stories of this kind at stock exchange. There were stories when people were, refunded. Robots are both good and bad in the sense that you don't have. It's you're protecting from fat finger, and also it's a possibility to use and adjust, customize algorithms to make them more efficient. Algorithms reduce inefficiency. Think of 2010 flash crash, when in 15 minutes in the U.S. the market dropped by 10% almost. It was so fast. Things were overlooked. But a similar thing happened in Russia. Think of Energobank. Do you remember when a bank was robbed or hacked, and up to 5 million of shares was launched into the market, and robots realized it was inefficient and they didn't allow the market to crash. So they realized very quickly that it was someone's mistake, and the investors didn't lose much. There was no panic. They realized the inefficiency. Well, somebody paid for it, but it's another story. There are risks everywhere, both here and there, but there are people behind them anyway. Andrei, Alexei. Sergey, I think, said a very sensible thing. I think technologies help us minimize risks for many, many people. A robot can make a mistake, but other robots and other people will use this inefficiency and cover it up. So you won't be having huge disastrous consequences. The technology we're using allow us to do this. We minimize risks for end users, and we want to use modern technology to bring more clients who would receive quality and long-term product, and the robotizing technology allows for it. It allows us to give an end user 24 hours a day, 365 days a year, provide them with relevant and topical information, allowing them to make decisions. They have some wrapper points, and the robot would inform them, asking what they want, how they want to do it. So automated consultancy or advising, collecting data for end users, help creating a risk profile. So each person would be offered a product they need. We have chain, HFT decisions, super long-term conservative products. All right, I mean, we have to wrap up. When we're talking about these algorithms, we need to understand that big data and algorithms also have their own limits. They can be in mathematical dependency. Somebody told me they found a dependency between the humans' height and the length of their hair. So women would often have longer hair, and men are taller. I mean, it's not true, but you can see this dependency. Well, it hasn't harmed the humanity. We don't know what this algorithm has, what conclusions has this self-learning algorithm has drawn from this dependency. There are regulators that share their vision. There's a structure of brokers that has been mentioned. You have stock exchange. So what we want to hear something. I'll give the floor to Sergey. We world of genders, a world of race, a world of classes. How do we call this? How do we make peace between human and robot? We used to praise robots. Some people saw it as an opening possibility. Some saw risks. But now, when we see that everybody finds their niche, we are calming down a bit. But what do you think about risks, Sergey? And what brings us new challenges? I mean, this techniques changes, or maybe it's a regular thing, and like people bring new challenges and new issues.
Any technological revolution changes the risk profile, but never eliminates them fully. We had discussed this 100 years ago. We should change horses for cars. We would have the same discussion, because the car has and has the pros and cons, and the horse has its pros and cons. So the risk profile changes. Cyber risks and operational risks are becoming one of the main financial institutions. Previously, we talked about the market and the credit risks. Currently, we note the operational risks as well, and this is a challenge for the regulator, because we now know how to monitor the operational credits. And we had the discussion on ethics of robotics. We're talking about fiduciary responsibility of the asset manager. What is the fiduciary responsibility of a asset manager? We started discussing robo-advising, but in our marketplace product, in the final form, the robot should not advise, but it should He would not know that he will need a new apartment and will create a family, will have kids, but the robot will know that, and it will construct the portfolio, assemble the portfolio according to the needs of the humans. So everything what humanity does is aimed at saving time, and in this sense, a robot save time for everyone. Because this is a resource which is not replenishable. And it's good to have Phenopolis, because we have been discussing this topic for 4 years already, and thanks to our discussions, we have some steps forward. We would have had some isolated steps had not it been for the discussions here. We don't need a large capital expenses here to suggest new solutions for the financial industry, freeing up the human from the necessity to learn something about the financial market. We have to experiment. Our task as regulators to monitor the system risks, the technology risks, and every company should understand that trust is the basis for all interactions in the market. And I hope that everyone is responsible, acts responsibly. And by replying to the question of Mr. Lukyanov, the MySix is not an unusual stock exchange, because the share of HFTs and algorithms it is not significantly higher than in the similar stock exchanges of emerging markets. This is close to what the developed markets are. We live in a unique country, live in a unique world. A new market appeared in a very technologically advanced country. This is a very rare case. Normally, a new market appears in a country which is not technically advanced, but rather has some oil deposits or gold deposits or diamond deposits, and a new company enters into the market. But right now, we are a technologically advanced country, so we had luck with this. We had luck with the market players. They have found a way to respond to robotization, to smarter trading, and offered lots of products and solutions which are offered to the clients. And we had luck with our regulator because it does not restrict those things like in the US, but rather stimulates, as we see it in the Phenopolis conferences. And we have a question of stock exchange responsibilities. There's technological reliability, because robots have some risks, bring some risks with them. Certification takes some time. This is the time we need to make sure everyone works fine. Next, the malicious practices like spoofing or layering stuffing should be avoided. There are lots of them currently, and we are sure that the stock exchange should monitor this and prevent this using different mechanisms, or at least point the attention of the market players at this. And you probably will not have to over-regulate this, and this is very hard to define those practices on paper. But it's clear what they are and how they do. And we are now using algorithms to prevent the malicious algorithms from following those practices. You do not have to switch them off, you just have to warn their authors. And the responsibility of the stock exchange to keep up or to be a step ahead of the robotization technologies so that it creates a platform for this to move forward. This is a complicated task, but we'll manage this. A provocative question probably to the MySix. The MySix discusses increasing fees for HFTs tenfold. do we want to increase the number, or do we want to reduce the number? We do not have HFT specific tariffs fees. This is a fee for unproductive requests. We split it up into maker-taker fees. So lots of opportunities to regulate the market, to influence the market, to hold somewhere, to restrict somewhere. If we fail to do this correctly, then you can just influence us using the committee vote. The new technological advantage you want to launch is also priced tenfold. So does the MySix actually want to stimulate or dissimulate this? Yes, the signals are different. Let's discuss. We have a little more time to ask questions. Do we have some questions in the audience? Igor Sidor of Mega Profile Holding. I would like to join Sergey, and I would like to pay everyone to pay attention. We do not have to offer an overly smart robots. The decisions should be simple. The decisions should be restricted in scope, and use ontologic models for that. This is the theory which starts to be trend here. Thank you. Any other questions to the panel members? That's great. Peace is established. I don't know which one is that, but I believe we will cope with that as well and define this peace between the man and machine. Thank you very much for your attention.